Do you want to hear a good reason why the price of gold and silver could stage a dramatic U-turn in the coming months before the end of the year? I've got two key things we need to consider. One has to do with inflation, the other, the Fed raising interest rates. A couple things you may not have thought of on your own. Hey, it's been a rough couple weeks, right? Gold mining stocks are down 20%. The price of gold and silver have been tanking, but there is reason to be optimistic. I've got a lot of information. I'm going to share it with you in this video. Let's get started. I have a key fact we need to understand when it relates to the price of gold and silver. Right now, everyone's talking about how the Fed's going to raise rates. The Fed's going to raise rates, and that's bad for gold. They've telegraphed they're going to raise rates. Everyone's expecting rate hikes coming down the road, and that means gold is going to go down. Wrong. Gold doesn't go down when the rates actually get raised. Gold and silver go down in anticipation of rates going up. And we've already gone through that period of anticipation. As a matter of fact, we've gone through two periods of that. We went through one kind of late last year, and then over the last, let's say, and we thought it was over, and gold then started to rally. And then in the last 6-7 weeks, the Fed became what I would call, they went from being hawkish to super hawkish, okay? But I think it's very likely that they're at their peak, right? They're giving it all she's got, let's say. We know they can't raise rates too high, so they're kind of at a point where their jawbone is about ready to fall off, if that makes sense. The jawbone is when they talk about the fact that they're going to do all this stuff, and the market in anticipation reacts. So what I'm saying is super hawkishness is priced into the price of gold right now. And what that means is that oftentimes, if you look at history, it's a fact that once the Fed actually starts to raise the rates, that's when the price of the precious metals goes up. Now, the risk is that the Fed becomes super duper triple bonus hawkish, right? But again, it seems like at this point, especially with a contracting economy, the GDP was negative 1.4% in the first quarter. If they take real solid further actions, the real risk is putting us into a depression. And there's a word I made up called depression. That's a depression with inflation. Hey, real quick, I'm glad you are here with me today. There is no Ron's Basement without you. If you could like my video, share my video, or subscribe to my channel, that would help support me. I put out new content darn near every day about gold, silver, precious metal mining stocks. If you want to stay up to date, keep coming back to the basement. I hope to see you again soon. Because while the Fed is jawboning away, and maybe they are going to raise rates. I mean, heck, the 10-year is already at 3%. While they're doing that, while the US dollar is at like 20-year highs, while the Fed is talking about quantitative tightening, and we've had a pretty significant correction in the stock market, they've thrown everything they've got at the demand side of the supply-demand equation that makes up inflation, right? We've already kind of reduced that demand side significantly. The problem is, and I've heard Jim Rickards say this, Leonard Zhang say this, other people, we also have a supply issue. So while they're bringing down demand, supply of goods and services is also going down. So there's still more demand than supply, which means they're having a real hard time fighting this inflation. I mean, they could just bring it all to zero, right? And there would be no inflation. But the reality is, while they're bringing down demand, supply is dropping proportionately, and maybe some ways even more. I mean, look at the supply chain issues. Look at the China situation with everybody being locked down. Look at the restrictions to international trade because of the war in Ukraine. There's serious supply constraints that are impeding the ability for the world economy to provide an adequate supply of food, goods, and services to match the level of demand. So the real risk as the Fed takes all these actions to fight inflation is that since it's a supply side inflation problem, they could send the economy into a deep recession or a depression, and we could still have inflation. You know all the underlying structural problems, $30 trillion in debt in the United States, huge deficits. I won't go through all that. I mean, we could have a depression with inflation, what I call a depression. Not deflation, a depression with inflation, a depression. And the Fed doesn't want that to happen. They don't want a depression. They'd rather have a decent economy with super high inflation, which is very positive for the price of the precious metals. Hey, I appreciate you being here with me today. We could see a U-turn in the price of the precious metals. You know I don't have a crystal ball, don't make any decisions based upon anything I said today, but I'm glad you're here. You're always welcome in Ron's Basement. You can subscribe right here. I'll see you soon.